Welcome to a beginner's guide to spotting, understanding, and navigating a growing market. This video will explore the concept of the bull market, or as we call it, the running of the bulls. A bull market begins with the 20% rule. It's a sustained trend where financial prices, whether stocks, bonds, or real estate, rise by 20% or more from recent lows. Think of this as the start of summer. The bull signifies expansion, driven by optimism pushing prices up. Conversely, the bear signifies contraction, where pessimism pulls prices down, often accompanied by an economic recession. The bull market is fueled by a strong economy. This includes high GDP, low unemployment, and rising corporate profits. Market growth is a reflection of increased consumer spending and production. The psychology of the climb is a self-fulfilling prophecy. As confidence rises, demand increases and supply falls, pushing prices higher. Liquidity is typically high because of the strong demand. The economy moves through 4 seasons: expansion, peak, contraction, and trough. Bull markets act as leading indicators, often starting the expansion phase before the data confirms it. Strategy 1 is the long haul, or buy and hold. This involves buying a security and ignoring daily fluctuations, trusting optimism to eventually drive prices higher. A variation is increased buy and hold. Strategy 2 is buying the dip, which uses retracement additions. Since prices don't rise in a straight line, dips or temporary reversals offer opportunities to buy more before the trend resumes upward. Strategy 3, riding the waves, is the most aggressive. This full-swing trading method uses short selling and active management to maximize gains from small movements. Remember, this is high risk and requires daily management. Legendary climbs like the 1920s, 1980s, and 1990s show that every bull market is unique. They are driven by different factors, including speculation, policy, or technology, such as the dot-com boom. The longest run in history lasted 11 years, from March 2009 to February 2020. This period was characterized by strong earnings growth, low interest rates, and sustained investor optimism, resulting in over 300% growth. The summit is clouded. Trying to time the absolute peak is nearly impossible. Missing the peak is better than riding a slide all the way into a bear market. Beware of the slippery slope. Use this bull market checklist for a flight check. Look for rising price action, GDP, employment, psychology, and corporate health to confirm if the market is expanding. The bottom line is that bull markets are periods of opportunity, optimism, and wealth generation. Recognize the signs: rising GDP, confidence, and profits to ride the wave. Enjoy the summer, but look out for winter clouds.